Hey, welcome everyone. I'm Ted Earhart. So, what do you think about Bitcoin? That is a question that I've been getting increasingly throughout 2021 as we have seen cryptocurrency prices shoot to the moon. And then, perhaps coincidentally, as I record this on May 19th, we're seeing a huge pullback today with many of cryptocurrencies being down 20 to 30% just in the last several hours. So it's a subject that's on people's minds due to all the price action naturally. And therefore, in recent months, I've spent hours reading about this subject and listening to very intelligent people debate the merits for and against. You know, the dichotomy of views is striking. Some of the strongest advocates will suggest that cryptocurrencies are on the precipice of taking over the global financial system, and others liken them to Ponzi schemes. So what's one to make of these deeply contrasting views? Well, that's what we're going to spend some time on over the course of 2 videos. For the record, I absolutely don't claim to be an expert in this area. There's so many dimensions to this subject, ranging from the blockchain technology that underlies all cryptocurrencies. This also gets into just the subjects of central banking and even modern finance. It's complicated. And that complexity, frankly, makes putting together a short discussion very difficult. I started and literally was having a difficult time trimming down a video to be less than 20 minutes. So I decided we're going to break this up into 2. We'll start by just having a discussion here about the basics of what cryptocurrencies are and some of the benefits and features, at least cited by those who are the biggest proponents. So stick around. I hope you enjoy the discussion. So starting with the basics, people often use the words Bitcoin and cryptocurrency interchangeably, but they are very distinct. Bitcoin just represents one version of cryptocurrency. And it happens to be the first one that was ever created, and therefore I think that's why it's the most well known. But there's literally thousands of other ones, with new ones being developed all the time. Up on the slide, I have the top 10 ranked by market value according to Coinbase. And as you can see in the price change, today happens to be a big washout day. Frankly, I think we were long overdue because we've seen some of these things up 5 times, 10 times, even far more than that just so far in 2021. So it's really kind of a crazy situation, and that's of course why it's garnered so much media attention this year. But at the end of the day, cryptocurrency is just software. And that's why new ones are constantly being created. Virtually anyone who knows how to write computer code can create a cryptocurrency. Now, conceptually, I think the easiest way for people to grasp this is to really think about these things as private currencies, which is in contrast to the sovereign currencies that we're familiar with, such as the US dollar, the Mexican peso, or the euro. Cryptocurrencies, in contrast to sovereign currencies, are not associated with a sovereign nation or governed by a central bank. That is what really distinguishes them from sovereign currencies. The other thing, of course, is they only exist digitally. They require the internet to exist. So in a nutshell, that's the basics of what cryptocurrencies are. I think the simplest way for people to think about them is as a private version of currency. So this brings us to what are the features or the benefits of cryptocurrency? Or in other words, I think a lot of people look at this concept and are a little puzzled. They're like, what problems are cryptocurrencies even solving for? Well, I've spent a lot of time reading about this, what I've found is proponents of cryptocurrency cite a host of benefits that kind of break down into these 3 categories, which we'll kind of unpack one by one. So again, proponents often will say, imagine a global currency that knows no borders. In other words, imagine being able to go to any country in the world where you can pay with the same currency. This obviously has a number of benefits, such as not having to mess around with foreign exchange, or obviously the fees that are associated with moving money across international borders, and or converting into different currencies. So a lot of practical benefits that probably have some real merit. So next is this concept of a fully digital currency. And this gets into the blockchain technology that underlies all cryptocurrencies. I'm not going to get into the technicalities of it, but one of the features of these systems is they were designed to cut out financial intermediaries. So, in other words, no banks or credit card processors needed to process transactions. The idea is money can transfer directly from person to person or person to business digitally just as easily as you handing someone a $20 bill in the physical world today. So some of the obvious benefits that are usually cited here are little or no transaction fees for executing, for moving money around. So obviously there's no bank to collect one. Also, one that I think is less commonly thought about is instantaneous settlement. So this contrasts to the current financial system where, if you write a check or if you pay some bill over the internet, even with a credit card, it usually takes days for those transactions to quote unquote settle. It's because the banks in between those transactions have to clear the payment. The blockchain technology, again, is supposed to allow for instantaneous settlement. Again, direct transfer of funds from person to person, person to business, and so forth. Finally, of course, this also means that banks would not be needed to hold our money or our currency. And if you're asking or scratching your head, well, what's the problem with holding my money in a bank? Well, cryptocurrency advocates point out that there's many places in the world that don't have developed or stable financial systems or may have corrupt authoritarian governments where citizens are regularly at risk of having their assets seized. It's something we don't think about here much in the United States. But if you live in a country like Russia, Iran, North Korea, Venezuela, there's plenty of reasons why you might think twice about holding your money in a local financial institution. I'm sure there's, again, lots of reasons why you might prefer to be able to hold your assets somewhere outside of the country. And again, without getting into the technicalities of how blockchain technology works, that is one of the features of it, and it's also out of the reach of authorities within those sovereign countries. So finally, there's this concept of a decentralized financial system or a decentralized currency. Again, the best way to explain this stuff is basically just to contrast it with what we know. All modern banking systems throughout the world today usually have a central bank at their core. Like in the United States, we have the Federal Reserve. Now, critics of institutions like the Federal Reserve will say that they are typically biased towards inflationary policies. And obviously inflation has its consequences. A dollar today has much less buying power than it did in the 1980s, the 1940s, and so on. Cryptocurrencies are supposed to solve for this problem. Bitcoin, for example, is issued with a finite amount of units. There will only ever be 21 million Bitcoins ever issued. And again, this contrasts to something like the US dollar, which can theoretically be issued in an infinite amount, which depends on what the Federal Reserve does. It also depends on the federal government, if we're continuing to run deficit spending and so forth. These typically are associated with inflation. Again, with many cryptocurrencies which are fixed in the numbers being issued, that is supposed to solve some of these problems associated with fiat currencies or sovereign currencies which can be issued in an infinite amount. So there's some of the basics and primary benefits and features often associated with cryptocurrency. Again, I think the easiest way to conceptualize this is to think about these as private versions of currency, albeit with this interesting underlying blockchain technology which allows all the features and benefits which we described. But before you're ready to make the leap of faith and say this is the wave of the future, you also need to think about all the questions that come up when you assess this a little bit more deeply. For example, what happens when countries themselves start to issue cryptocurrencies or digital sovereign currencies? Well, those are the types of things we're going to talk about in part 2. So I hope you'll join me for that discussion. We'll see you next time.